it is not looking all that great. It is not looking all that bad. Markets in my book is again and again telling you that participation is the buy the market at lower level, and if you are participating on a bad day, you're making money. The market breadth has improved. The FI selling has not been extraordinary high, unlike what they sold and dumped in the month of July and August. I guess the FI selling also has, in a sense, subsided. Brent is behaving itself. It's meandering in and around 60, and US markets are firmly fixed in the green. That's the FI versus DI picture for you. The green bar is the FI picture, and the blue bar is the DI picture. And last couple of days, the green bar has really been a clear indication of what foreign institutional investors are doing. I want to start with what's happening, Sameer, with the selling patterns. Looks like FI selling is subsiding.
Morning, Nikunj. I think FIs have now begun to come around to the view that there must be something that this corporate tax cut announcement last month would tend to do for a longer term basis in specific corporates. For example, let's take Hindustan Lever for that matter. The results that were reported a couple of days back, I think the volume growth was definitely a positive surprise, because on a high base, you still reported 5% underlying volume growth. Now, for a company which is probably the proxy for the way the consumer demand is holding up, I think that is definitely some sort of a reassurance that it is not as bad. And more importantly, I think the first wave of the numbers that you see would tend to be typically the better ones, or the more in line with expectation. But I think the more important trend from the FI perspective is also that I think a market that perhaps after the announcement you've seen a decent rally up to say the 11,700 levels at the Nifty, and then you saw a very quick and sharp rebound. I think so they are taking a selective view and then putting in wherever they find that yes, the correction has been done and the effective tax rate reduction will be more relevant from an earnings upside over the shorter term or even the medium term basis. So I think they are being very selective, and as the results keep coming, you will probably see that this trend should then play itself out on a more sustainable basis.
Sameer, morning. What is it that you're making of this entire trend that one is seeing, wherein promoters are offloading their pledged shares? Yesterday was, of course, Kushagra Bajaj when it came to Bajaj Consumer, wherein now in 7 months he's offloaded a sizable 29% stake. Do you think this is the last resort, or would you take it positively that given this kind of a scenario, they don't have a choice but to sell Family Silver?
Well, Aisha, I think all promoters are mindful of the fact that what is playing out in the Z group is something that everybody wants to stay clear of. So I think that is very much on the back of everyone's mind, and it is so-called the fear factor in the room. So one thinks that today, if there is demand, if there is a value that I'm willing to get, I think it is better that you try and deleverage it, even if at the cost of selling Family Silver, so to say. But at least the debt overhang needs to be addressed, because since it's a volatile commodity, the stock price is a volatile commodity, prices fluctuate. So suddenly, in case there's an adverse news and you see a very sharp price erosion, I think then you don't want to be in a situation whereby you have to sell under compulsion, where you don't have the right of refusal, so to say. And then it's always at the behest of the lender, who then takes a call. So I think most promoters are sensitive and alert to the fact that till the time there is a reasonable value band which is exciting investors as well, at that time it is better to raise some liquidity, get the debt off, and ensure that the company and the group is fully funded. I think that's pretty much playing on everybody's mind, which is not a bad thing, essentially.
So should be taken positively by the market, Bajaj Consumer?
Well, yes, I think, and both on terms of the kind of investors who have seen to be showing interest, I think that also augurs well, because that gives an indication that people are willing to bet on the company at this valuation, and to them the outlook seems good.
So let's look at, there you go, 52-week change in Max Financial Services is up only 6%. This is a time when almost every insurance company in India, with the exception of every private insurance company in India, is either sitting at a 52-week high or is about to migrate to a different high. So let's look at HDFC Life, SBI Life, ICICI, General Insurance. All these stocks in last 52 weeks, they've gone up by 50 to 60%. Now Bajaj Corp, the company owns this famous brand Bajaj Shevashram. But because of the promoter pledge, it has really gone against what the FMCG index has done in this year. So I'm comparing the FMCG index with Bajaj Consumer, and there you go. Emami is down 29%. Bajaj Consumer is down 29%, is down about 30-35%. But in last 52 weeks, the FMCG index has given you an uptick of about 8%. So the promoter pledge overhang, I think it's also applicable in Z. Z was at 400 rupees. Now Z is come below 300 rupees. So the promoter pledge, I think, is a issue which is really bothering markets. And if promoters are able to take care of their pledge and check their capital commitment, some of these businesses are outstanding. And because if the overhang is lifted, I guess we could be looking at a very different kind of a re-rating in these stocks. Sameer, which one will you buy?
Because I think firstly at the index level, if you see, most of the index is marked by one or two couple of biggies there. But on a broad basis, I think what you rightly said, the demand is holding up. And let's say those who are addressing the more rural place, for example, the Imamis and the Bajaj Corps, they are the ones who are addressing more the rural market. Their premiumization upstick is not that much as probably the urban-centric companies. So hence you're seeing that because the rural market demand has come off and come off more rather than the urban ones, that's why these stocks have not been even as reporting as strong numbers as perhaps the other guys who are looking at the urban place. But having said that, I think from here, the value proposition is perhaps more better in the urban ones, because at least there the demand visibility is higher. So unless and until you see some real change in the rural coming back, I think people would tend to be safer in the urban-centric names.
Okay, fair enough. Let's touch upon earnings for a moment. I do want to ask you about Wipro, Sameer, because it did surprise, and I think markets may have had some kind of wind of it because the stock was already looking good last couple of sessions, and it's bound to react today as well.
Abha, I think there was a case of also muted expectations. So therefore, on the back of that, whatever was delivered, it did not disappoint markets, because at least from the other two ones, TCS and Infosys, which reported earlier, people had a certain set of growth estimations, which maybe perhaps not met fully in the quarter. Although there were a lot of green shoots, I mean the TCVs were good, the hiring was good, but the outlook is and the demand visibility is still low. I think on Wipro, the outlook going forward still continues to remain not that robust, but the valuations are definitely far better. So maybe that's the reason why it presents itself as as a better candidate for someone looking for buying afresh.
Activity building up. I know we've already spoken about consumption, but if I just take that conversation a little forward to some of the auto names, Sameer, just given the kind of traction we were seeing yesterday, could be the festive boost purely short term, or do you feel perhaps there's some merit at these levels, whether it's a Hero or Maruti?
Well, Ava, I think it'll be unfair to comment on a one day's price movement, but I think the way most of these stocks are behaving in terms of the monthly numbers, I don't think there's going to be anything great in terms of what one can expect for incremental demand visibility. Yes, the monsoon has been good, so the expectation of the festive season is definitely upbeat, and the fact that liquidity in the system has been flush for at least 4 months now. So people are expecting that yes, there will be some amount of purchases that will come through, and let's hope that specifically this year, the way the so-called inauspicious period of Shraddh happened, that was bang in between the 10 days towards the second half of the September month. So if you remove that impact, I think now one has to look at how the whole quarter, which is June, July, July, August, September, plays out in terms of earnings, because most of these auto names would also have seen a lot of margin impact, because I think whatever sales has happened at a fairly high level of discounting. So you need to see two things coming up. First is the sales number, at least on a change in momentum, have to be visible on a month-on-month basis, and the discounts also have to fall. Because if that doesn't happen, so then ultimately it will not lead to any amount of investor confidence coming back from what has already been built into the price.
Some of the PSU names, Sameer, Concor, of course, we've been talking about. BPCL is a big one. Many others that are now just the cynosure of all eyes, from the basket. What's looking attractive to you? Where would you still perhaps look at with an eye to the divestment agenda?
Well, Abha, I think most PSUs that have been spoken about in terms of a so-called strategic divestment, which is Concor, BPCL, Shipping Corporation, I think the expectation has seen a very sharp recent price move. So I think from a valuation perspective, most of them have probably now trading at the upper end of the value band. But having said that, obviously the government showing an intent to make strategic divestments and let go of businesses, I think that itself would have larger implications in terms of the whole macro environment improvement, because then people will start really believing that the 1 lakh crore plus divestment target that one has been put, and we have only about 3 months to go. I think that would, you need to show more comfort and confidence that yes, that will indeed be met, because otherwise the whole thing of whether you'll be able to stick to your fisc target, I think that will then start coming into cloud. And the recent inflation data, although has also tempered some amount of rate cut hopes, but the growth has actually, the narrative on growth is perhaps more concerning, and hence that's the reason why one would like to see that to be able to raise resources to sort of keep the public expenditure going and front load quite a lot of it so that you actually see some amount of demand recovery. I think for that people would look for some concrete move on the divestment agenda. Just the mention of mere names. So the names has been shared in the public space. Markets have reacted, but there needs to be something more in terms of seeing to it that the intent is actually put into practice and completed. Because we've seen other areas also like the IBC. It was a great effort and it was a very good legislation, but unfortunately the timing and the delivery has not kept up pace as one would have liked it to be. So I think those concerns still persist.
Aramco may be looking at, could be or is open to a strategic stake in BPCL. Now we know for sure that government is looking at selling financial stroke a strategic stake in BPCL. Aramco also has a in principle LOI, which is letter of intent with Reliance to pick stake or to invest in the refining business. Reliance does not have a fuel retailing arm. So if Aramco is indeed in initial conversations with BPCL, this is completely source-based. I will say it again, this is completely source-based. We've simply gathered it from our, from our sources. That also means that Aramco is also interested in the oil marketing business. Look, the Arabs know that the fuel consumption or the fossil fuel consumption in the world will only reduce. China is slowing down, electric vehicles are a reality, and they really need large partnerships and large markets where they can sell their crude oil. First is refining and then is distribution. So if I put logical, if I logically analyze this deal, it makes perfect sense, because this also would have some kind of blessings both from the Kingdom of Saudi Arabia and from the government of India. So it would be interesting to see how BPCL actually moves today. Yes Bank, suddenly the stock has stopped falling. Sameer, the stock has stopped falling. I mean, you may laugh, we may think about, okay, everybody knows the bad news, but it's available at a market cap of 10,000 crore. That's the bottom line. It is trading at a price to book, assuming that the book is not opaque. Even it is trading at the price to book of about 0.4 times.
Well, Nikunj, I think the Yes Bank story has to play out, because you have to see that the second level of fundraising that we've always been wanting to look at, that past the first QIP, which was basically done to ensure that the bank moves forward. I think the second round of fundraising is what people want to look at. What is the value, what kind of investors, and how much is the commitment? I think all these things about ensuring that the employee morale is high, the kind of salary hikes and the increments that we spoke about that were reported as being given, I think those are good things. But at the end of the day, one needs to look at how long will the ship sail and who's willing to back it. Because today, the second round of fundraising has to be from a private equity stroke strategic investor who wants to be there for the long haul. And I think that is very, very critical. So yes, the stock might have stopped falling, which might be a factor that probably Siddharth may be better to comment upon. But I think in terms of what happens from here onwards for a long-term institutional investor is that I want to know who's wanting to come on board and be a part of running the management, be accountable to investors, and be there for the long haul. So I would be wanting to see that data point before anything else.
Bajaj Corp could be the star today. I think markets are appreciating the fact that Indian promoters who have made entrepreneurial mistakes in the past, they are ready to fix it. I'm all for this. I have the deepest admiration for entrepreneurs who are coming out in the open, admitting that, look, we've gone wrong with the capital allocation. We should have never invested in the infra space or the power space, and somehow we ended up taking a lot of balance sheet risk. But now we want to plug the hole, and we are ready to sell a family silver. Bajaj Corp in a sense has been the family silver for Kushagra Bajaj and his family, because it's an outstanding business. It just generates a lot of cash, sizable market share, owns the brand Bajaj Shevashram. So when promoters are doing that, like Emami, Bajaj Consumer, Apollo, let's look at the data actually, just for the benefit of our viewers and just for the benefit of those who've tuned in. Which are some of the Indian promoters who are trying to fix the balance sheet by selling the family silver? Emami, FMCG company. They may be going through a patch of slowdown, but I think it's an outstanding business with an outstanding distribution and rural reach. The promoters have sold 20% in 2 tranches. Bajaj Consumer, the promoters have sold 29% in last 7 months, almost 30%. Then the third one is Apollo Hospital, where the promoters again have sold stake and sold some of the non-core businesses also in order to really reduce promoter stake, promoter liability. Sameer, forget this theme, but if you have to buy one stock where you would say, look, I'm going to buy it, doesn't matter what your view is, what Kunal has to say, what CK may indicate, I will buy it because I'm convinced that it will make money in 1 year.
1 year, I don't know, Nikunj, but I think from a franchise point of view, I think Z at the current price risk reward definitely seems to be a business that should merit a look, because their subscription growth is good. The Z5 is in investment mode, and it is at least showing initial traction. And I think from a point of view of the brand recall and its penetration, it has got a fairly decent addressing a fairly decent genre of the Indian audience. So I think from a business value point of view, and from the fact that whoever runs this business is of course critical, but I think the business itself at this risk reward, there's a lot of merit in 25,000 crores of market cap for Z at this price.